Hey guys, welcome back to the channel. In today's video, I'm going to be talking about this very key rejection for Cardano right around the level at 42 cents. I'm also going to be providing my general longer term market analysis update. We're going to look at some key levels of support as well as some moving averages to pay attention to into the next few months. So if you guys enjoy the content, make sure to leave a like and subscribe. Also, by the way, I will leave a link to my Twitter page in the description below. You guys can go ahead and check that out if you want. I'm fairly active over there as well. So I really do want to start off by focusing on this level right around 42 cents as a huge level of resistance where it was previous support going all the way back here to May. We actually had a pretty decent bounce off this region. Cardano was able to find support off this zone and then have a pretty remarkable rally from this point of support. It bounced about 58%. And then Cardano came back down, retested this level in June. We had another retest right here in July. And then yet again in August and right here in October, we really started to roll over, and then actually Cardano lost that level of support. We came back down and then we formed a lower low, falling below this low that we had from the May capitulation. And then over the last few weeks, Cardano did get a double retest of this zone. Both attempts, the daily candles were unable to close above this region, and Cardano has now rejected off of that, rolled over from here, and we're starting to form lower lows, really signifying and putting some follow through into this rejection that we had once again at that zone around 42 cents. So this is very significant to me because it shows me that the buyers and the demand have started to lose interest at this level where they previously stepped in about 5 times over this several month long period. Now that is where sellers are starting to get interested. That is where the resistance is formed, and we're again forming those lower lows, we're breaking down, and we're losing our support. So I do want to talk about what I'm looking out for next, considering that we have lost this. So I want to look out for the weekly chart, and I'm going to switch the time frame over here, just so that we can get a better idea of what the next key level will be for Cardano. So I'm going to be looking at this zone I have marked out in green that ranges from 15.6 cents all the way up to around 17 cents. And if you're wondering why this is important, it's because it has also been a very key level for Cardano going back to the previous cycle. You can see that first, when Cardano was actually losing this level right here in 2018, the first time it really started to break down, this is the level Cardano found support off of. It bounced off this region, the weekly candles held this zone, and in fact, ADA was able to bounce by about 175% right back up into that region of support at around 42 cents. So we had that rejection, and then we had a pretty big move coming back down, forming lower lows, rolling over, and then ADA started to flip this zone at 15 cents into resistance. So we fell below it, rejected off of it, and then continued that bear market trend. And then we also had a retest right here in July of 2020, also holding resistance. We had a pretty significant rejection off of this as well. From this point, ADA dropped by about 57% over just the following few months. And then again, we had that second retest right here in December. This is where Cardano started to consolidate. And when we did break above that zone, very quick to move up to that next region around 42 cents. So this is going to be a very key level to watch out for longer term support for Cardano, considering that we have lost this zone at 42 cents. And what's very interesting to me is how Cardano actually had something very similar play out right here back at this peak that we had throughout 2021. And if I just mark out this zone right around $1, you can see a very similar thing. This was actually a very strong level of support for Cardano, held this zone on multiple attempts. All of these weekly candles were bouncing off of this zone. And then eventually we did have that breakdown, and then we flipped it right into resistance on this lower high in April. And then from that point, ADA dropped to the next zone of support in a very quick period of time. So it's basically the same thing, the same exact pattern, only this time we're much further down. So that is certainly something to consider. And you might think that that would be too harsh of a downtrend. But what I think is important to note is that from the all-time high to that next zone of support, if we were to get there, that would mark about a 95% correction. And this is something that we've actually seen in the previous bear markets. For example, Ethereum last cycle in the 2018 bear market declined by exactly 95%. So it's certainly not out of the question, and it's just a matter of if ADA can reclaim this zone at 42 cents, which as of right now looks unlikely, and I really do have to respect this very dominant downtrend that we have started back here in August of 2021. All those lower highs have been very consistent, and this downtrend has definitely been a very continuous move where Cardano really hasn't broken that structure ever since we started forming these lower highs and lower lows back here beginning in August of 2021. So I also do want to talk about another level of resistance. So I'm going to remove all of these drawings and just toggle on the 21 and 20 weekly moving averages. So this has been another strong level of resistance throughout this bear market. You can see very consistent, continuous rejections off of this level as well. We had this rejection right here in January, another rejection in April, and then rejections in here in August, as well as September. So currently these two moving averages are around 45.5 to 47.2 cents. They will average down over the next few weeks, considering that they have been downward sloping, as the 20 weeks ago we were closing prices at some much higher valuations. So this is also going to be a very key level of resistance. You can see this is actually resistance back in the previous cycle as well. So longer term, we do have a lot of levels to reclaim before we can really start to reverse and give some convincing signs of a bottom in place. So I will be keeping an eye on those levels into the next few months, and I will also be watching out for the support further down from here, and again that 15 to 16 cent region. So I hope you guys did enjoy the content and the analysis. By the way, make sure to check out my Twitter page. I'll leave a link to that in the description below. As always, I hope you guys enjoyed, and I will see you in the next one.